Hello, I'm Ron Wilson and welcome back to PD Sessions. The Australian government declared that the budget is unlikely to get back into black this financial year as tax receipts were being squeezed by weaker growth and a strong local dollar. Internationally, the US averted the fiscal cliff with a deal that boosts taxes on the richest Americans and delays big spending cuts, while German Chancellor Angela Merkel warned that the Eurozone debt crisis is far from over. In other news, ASIC finalised its key guidance on two key aspects of the FOFA reforms, the best interests duty and scaled advice. Victoria Papandreou has the details.
It's unlikely Australia will post a pledged budget surplus in the 2013 financial year, Treasurer Swan has said, as weaker growth and a stronger local dollar have hurt federal tax revenues. The federal government had forecast a budget surplus of $1.1 billion for the 2012-13 financial year in its mid-year economic and fiscal outlook released in October 2012. However, taxation receipts in the first 4 months of the financial year plunged $3.9 billion and would likely fall further. The lower tax income is due to falling commodity prices, the strong local currency, and weakness in the world economy, which has hurt the mining sector's profits and dented consumer confidence. Despite this, credit ratings agency Standard & Poor's said Australia's stable AAA rating is not under immediate threat. S&P said the nation's public sector debt is still low compared to other advanced nations, and the government is expected to balance the books over the medium term. Looking to abroad, the United States Congress approved a plan to ward off the fiscal cliff of $600 billion in spending cuts and tax hikes that threaten to tip the world's largest economy into recession. Washington's year-long impasse broke after the Republican Party caved into President Obama's demand to raise taxes on America's wealthiest households and delay automatic spending cuts worth over $100 billion for 2 months. Key elements of the bill include continuation of the Bush-era tax cuts, except for individuals earning more than $400,000 and married couples earning in excess of $450,000. Capping of tax rates on dividends and capital gains at 23.8%, and delaying the sequester cuts to health and spending cuts put in place after 2011's debt ceiling deal by 2 months. Looking to Europe, German Chancellor Angela Merkel has warned that the Eurozone debt crisis is far from over and that the economic environment in 2013 will be more challenging. The gloomy outlook came as the country's central bank cited the possibility of a recession in Europe's largest economy. Germany has picked up a significant part of the tab for the bailout of debt-laden European economies such as Portugal, Greece and Ireland. At the same time, its growth has suffered as Eurozone activity has shrunk. Still, Merkel said the structural reforms put in place to reduce debt and boost competitiveness of weaker nations are beginning to work and would result in a stronger Europe in the long run. Looking to Asia, the World Bank raised its forecast for China's growth in 2013 as stimulus measures and substantial infrastructure investment boost economic activity. GDP in the world's second biggest economy will probably increase 8.4% this year, up from an earlier 8.1% forecast, the bank said in its December 2012 East Asia and Pacific Economic Update. The report noted Chinese fixed asset investment grew by 21.1% in September 2012 year on year, 3.6% higher than in August due to the impact of policy easing earlier in the year and local government stimulus programs. The World Bank suggested that gains in factory output and investment suggested that China's economy was bottoming out. To domestic news, the federal government has tasked financial regulators to strengthen regulation of companies that issue debentures to retail investors. The move comes after Banksia Securities collapsed in October, owing $660 million to a range of investors, including farmers and the elderly. Minister for Financial Services and Superannuation Bill Shorten said ASIC and APRA will this year consult on proposals that involve mandatory minimum capital and liquidity requirements, restricting the ability of issuers to offer at-call investments and use bank-like terms to describe their products, improving ongoing disclosure to investors, and enhancing the capacity of trustees to monitor the financial performance of issuers and compliance with their legal obligations. Turning to regulatory news, ASIC released final guidance for two key aspects of the FOFA reforms: best interest duty and scaled advice. ASIC's guidance to the best interest duty, which is an update to Regulatory Guide 175, Licensing, Financial Product Advisors, Conduct and Disclosure, covers the following elements: acting in the best interest of the client, satisfying the safe harbour for the best interest duty, providing appropriate personal advice, and prioritising the interests of the client. With a key objective of FOFA being to increase access to good quality scaled advice, ASIC has also provided specific and practical examples about giving scaled advice while complying with the best interest duty. The guidance, provided in Regulatory Guide 244, Giving Information, General Advice and Scaled Advice, includes worked examples of scaled advice by banks, general insurers, super funds, financial planners and stockbrokers. Total assets in SMSFs rose to a record as an increasing number of younger members opted to take control of their retirement savings. In its latest report, the ATO showed SMSFs held nearly $439 billion of assets as at 30 June 2012, up from $423 billion at the end of the 2010-2011 financial year. The report indicated the average SMSF member balance was now over $506,000. For SMSFs established in 2008, just over 50% of members were under 55 years of age, which compares to almost 62% of members of SMSFs established in 2011.